Welcome back, my friends. Well, I guess we all knew it was coming. Meta has been reporting declining revenues for a few quarters now. Shareholders are revolting. Layoffs are coming. So, apparently is the metaverse. But today, Meta CEO Mark Zuckerberg basically dropped the bomb we all knew was coming. That is the Meta Q3 earnings disaster. Revenue and earnings were both big misses. Guidance was worse. Shareholders and Wall Street analysts are growing restless. As everyone knows by now, shares in Meta have lost 65% of their value in the past year. Rumors are swirling that the company is preparing for big layoffs. Already, Meta is said to be conducting stealth layoffs without making big public announcements. Meanwhile, users continue to flee the main Facebook platform. Revenue has declined for the past 2 quarters. And Wall Street analysts are expecting revenue to be down again in Q3. I am covering Meta closely because I know that this is one of the most popular subjects on this channel. Everyone seems to be weighing in on the subject and wanting to hear what everyone else is saying. What do the recent events mean for Meta, and what does its future hold? What does it mean for big tech companies? What does it mean for the economy? And, what does it mean for the future of the United States? But, before we get into all of that, please press the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Well, today was the day Meta reported Q3 earnings. As expected, it was an earnings disaster. Also as expected, CEO Mark Zuckerberg doubled down on his commitment to spend billions of dollars on developing the metaverse. And this is a huge expense that has Wall Street absolutely worried. Analysts are also worried about the health of his Meta's online advertising business. On a call with analysts as part of Meta's third quarter earnings report, Zuckerberg and other Meta executives responded to questions from quite a few frustrated Wall Street analysts. Analysts are sounding the alarm as they are increasingly frustrated about rising costs and expenses. Expenses skyrocketed to $22.1 billion in Q3. That is 19% higher than in Q3 of 2021. Not surprisingly, shares in Meta cratered 19% after the earnings call this afternoon. Oh, and by the way, Meta also reported weak Q4 guidance that did not meet Wall Street estimates. Revenue for Q3 is down 4% as compared to the same quarter in 2021. Specifically, revenue for this Q3 was $27.7 billion. Profits sank 52% as compared to a year ago, coming in at $4.4 billion. I guess you could say that the bright spot in this whole thing is that Meta is still profitable. Some other companies are actually losing money. Meta's virtual reality labs unit is responsible for an outsized portion of the sky-high expenses. That unit is developing the virtual reality and related augmented reality technology. This technology is at the core of what is set to become the metaverse. The virtual reality labs unit lost $9.4 billion so far this year. What is worse, revenue from the virtual reality unit fell by 50% as compared to Q3 of last year. Revenue was $285 million and the trend is in the wrong direction. Meta Chief Financial Officer Dave Wenner blamed the decline on lower Quest 2 sales. We do anticipate that Reality Labs' operating losses in 2023 will grow significantly year over year, Meta said in a statement. Beyond 2023, we expect to pace Reality Labs' investments such that we can achieve our goal of growing overall company operating income in the long run, Meta also said. Investors are likely feeling as if there are too many experimental bets versus proven bets on the core, said Brent Thrill, an analyst at Jefferies. Thrill also asked what makes Meta so certain that the experimental bets like the metaverse will pay off. I just think that there's a difference between something being experimental and not knowing how good it's going to end up being, Zuckerberg said in response. But I think a lot of the things that we're working on across the family of apps, Zuckerberg added. We are quite confident that they're going to work and be good, Zuckerberg continued. We are improving our Reels short video service, its content recommendation algorithms, business messaging features, and online advertising technology, Zuckerberg also said. I cannot tell you right now how big they are going to scale to be, but each improvement is kind of going in the right direction, said Zuckerberg. Obviously, the metaverse is a longer-term set of efforts that we're working on, added Zuckerberg. And I think that that is going to end up working too, Zuckerberg also noted. There are a lot of things going on right now in the business and in the world, Zuckerberg added. So it's hard to have a simple "we are going to do this one thing and that's gonna to solve all the issues," said Zuckerberg. Meta is dealing with the many issues that all big tech companies are facing. Changes to the Apple 2021 iOS privacy update making it harder for Facebook to target ads. Stiff competition TikTok. So, we need long-term investments into the metaverse that are going to provide greater returns over time, he said. I think we're going to resolve each of these things over different periods of time, said Zuckerberg. And I appreciate the patience and I think that those who are patient and invest with us will end up being rewarded, Zuckerberg said. Zuckerberg did explain that one reason why his company is developing the metaverse is make sure that it actually owns a platform. That way, Meta will not be so negatively impacted when companies like Apple just decide to change a policy. It is clear that Meta was truly exposed in a way that they could not do anything about Apple's policy change. Zuckerberg also explained that Meta will be more powerful and innovative if it builds both the hardware and software. A lot of this is just you can build new and innovative things by when you control more of the stack yourself, Zuckerberg said. And, I guess that I would have to say that Meta is feeling a little burned by Apple. Apple controls both the hardware and the software. Now that the change in Apple privacy policy takes its toll on Meta, we see why this is so important. But clearly, Wall Street is not seeing all of his vision as clearly as he is right now. But maybe that is a big part of the reason that Zuckerberg was so successful in building Meta in the first place. So, every quarter will be something of a new experience in seeing how the situation develops at Meta. One thing is for sure, Meta seems intent on using its billions to create something new and innovative. There is not a lot of ground-level evidence right now that everything will work out as planned. But, is there ever when we are talking about what is really the next big thing? Meta shares have lost about 2/3 of their value since their peak 1 year ago. The metaverse is a somewhat yet to be defined place. But Zuckerberg says that it is the future of Meta, despite accounting for virtually no revenue. The metaverse is not cheap, it is costing billions of dollars every year to build. So far, Wall Street investors do not seem to be buying it. Some Wall Street analysts think that the downward momentum is actually an irrecoverable death spiral. Meta remains a dominant player in mobile advertising. And the company business model is one of the most profitable on Earth. Just as an example, Meta revenue is down by 36% from a year ago. But, even with this much of a revenue decline, the company still generated $6.7 billion in profits. Meta ended Q2 with $40 billion in cash on its balance sheet. Wall Street analysts are forecasting Meta revenue to continue to decline with no end in sight. But, what do you think? Please leave us a comment below and hit the like button. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Please share this video on social media. Thank you for watching.